What's going on, guys? Welcome to this trading psychology masterclass. Thank you guys so much for clicking on this video here. It really does show a lot about you as well, because you are willing to take that next step in the right direction in your trading. And honestly, it's probably the most important step. We have a lot of things to cover in this, some tips and tricks to help you guys in navigating today's market. But I first want to start off with a quote by someone who is named Luke Belmar. You guys might have heard of him, you might not, but this quote ties into exactly everything that we need to talk about in this video here. Study Newton's third law. For every action, there is an equal and opposite reaction. And it's the principle of sowing and reaping, that for everything you input into the world, you will output in equal proportion to that which you input. If you go to the gym X amount of times, you will obtain X result in accordance with the effort you put in. The reason I find this to be an extremely empowering law is the fact that you are in control. The life that you have is the life that you chose. The decisions that you have made have put you where you are today. A lot of you guys are happy with the life that you currently have. A lot of you guys are not. And that is in direct proportion to the actions and decisions that you have made up until this point. If you want a different life, make different choices. So without further ado, let's roll the intro and let's get right to it. Now, before we move on, I want to break down that quote a little bit and tie it back into trading. Now, when you think about that quote there, you are in control. Whether you are losing or you are winning in whatever you are doing, you are the one making the decisions. You're pushing the buttons on the screen in terms of trading and making sure that you are entering and exiting the positions how you want to. But you may not be getting the desired result, which is why you guys are here. So let's go over a couple of the basic mistakes that people make, because according to that quote, guys, and again, I think that's such a powerful quote there. If you are then in control of your failures, then the opposite, you are then in control of your successes. So if you've been making decisions that are causing you to fail, you can also change and start to make decisions that are going to yield you success. So let's just start with the basics. So the first one is no risk management at all. Let's say you're a new trader, you are just getting into the market, and you have zero understanding of risk management. You are full porting 0 days, you're trading without a stop loss and things like that. Step one is going to be how to learn to manage risk. That is one of the biggest psychological aspects of what we are doing here. Now, there's two key ways to manage your risk. You can either have a hard percentage stop. Now, you're only going to want to do this if you have fully fleshed out your system, because if you know that your system is going to yield you, let's say on average, about 10%, 15% gains, you then need to have a stop loss that is going to enable you to be profitable according to your win rate. The second way to manage risk is to define your risks as to points on the chart. Now, I have made videos about this in the past. I believe they're linked down in the description here, my risk management video. Make sure you guys go watch that if you guys are interested. But that's the basics, and I don't think that's why a lot of you guys are here. A lot of us have an understanding of exactly how to manage risk, but we're still not winning. Now, the second thing that I have seen time and time again after working with thousands of traders and retail investors is straying away from your plan. Now, let's go over a little bit of an example here about this and kind of extrapolate things, because most of the time in trading, if you start to think about things in a different and logical way, things become a lot more clear to you. Now, think about it like this. I'm going to pop a screenshot up right here. In this algorithm right here, this 15,000% gain is the back test of the strategy that we teach in our private community, the Trade 1348 platform, every single day. The strategy itself, the way that it manages risk, is absolutely unbelievable. Oh, and by the way, if you guys do want to hop in there with us, you do get a month free with code GAINZ, GAINZ. Make sure you guys check out that link down below. 1 month free if you do want to join us and get access to all these incredibly powerful tools. But then I'm going to pop up this next screenshot right here. Now, this is a screenshot of a video in which one of our members was able to turn $8,000 into $1 million. Now, with working with thousands of people every single day, obviously, some people are a little bit newer, some people are a little bit more experienced, and some people have been at it for a while and are still struggling. Why is that? Now, the analogy that I like to use all of the time is what I want you guys to try and think about doing in the market is acting and performing as close as you possibly can to a robot, an AI, or a trading bot. Because if you can program yourself with those types of rules, then you are most likely going to have success. Again, the algorithm works. You should then attempt to trade like the algorithm. Now, the analogy that I like to use all the time with straying away from your plan is as follows. Now, a lot of you guys that are watching this video right here from my experience do have military experience. You were in the military. You're a veteran. So first of all, thank you for your service. But I want to go over this right here. Let's say, for example, that you are a sniper in the military. Your commanding officer gives you an order that you are at a position and you are supposed to be taking out target XYZ. That's your only mission there. You have blinders on. You are looking for very specific signals in order to execute and complete your mission. Now, if you see some random individual just running around the street, are you going to execute? No. It would not make any logical sense to do so. It is the same thing with your trading plan. If you are looking for very, very specific things in the market and you do not see them, it means that you are not pressing that buy or sell button. You have to be incredibly disciplined. Now, after that, when we think about straying away from our plan and we think about why most new people struggle, there are two things. The first is fear. The second is greed. Fear is an interesting one that we can spend a lot of time on, but greed is a very, very simple one that we can go over here. Now, when we're thinking about greed, what most people see in their experience getting into the market is through social media. You see it on Twitter, you see it on Instagram, you see it on YouTube, you see it everywhere. TikTok especially, you see all these people flexing their gains, $10,000 in a day, $50,000 in a day with their Lambos, their jewelry, everything. Now, while that is possible, with your $1,000 to $5,000 account, you are not going to be able to generate those returns, and you have to be okay with that. You have to understand your portfolio size and say, okay, this is what I am working on now and working with. How am I going to then get to those levels? What we're really doing here in trading is learning how to manage money. It's not necessarily who can flip the account the fastest to the craziest amount. Let's say that you run up an account from $5,000 to $100,000 in 2 days. Odds are you are going to lose it because you have not generated any actual hard skills and know how to repeat that process in the market. Again, trading is all about repeatability and going back to what we said earlier, having a plan. Now, greed's another interesting part, and there's different kind of levels of greed. It's almost like on a sliding scale, like we talk about our sliding scale of risk all the time. With greed, a lot of you guys will see that you are up about, let's say, 1% a day on your account. Now, when you see that $10 or $100 you're making in a day, making 1%, whether you're trading with a $1,000 or a $10,000 account, you might be thinking to yourself, what did I just waste all day for? Now, it's not necessarily a waste. There's a concept called mental capital where if you are able to generate these consistent results in the market, it gives you more confidence to enter that next trade according to your system with proper risk management. Now, again, I want to just go over a little example with you guys. I know a lot of you guys have seen these compounding calculators, but not like this. When we come over here and take a look at a part of our platform here, we do have a daily compounding calculator on it in which you can download the Excel spreadsheet to give yourself a schedule of what you need to make per day in order to get to your goal here. Let's say your financial freedom goal is $1 million. We're going to use $10,000 here as an example to just see how long it would take you to go from $1,000 in your account to $10,000. With 1% per day, it's going to take you 232 trading days. Now, there's 252 trading days in a year, so you technically could be doing this in a year. You could 10x your portfolio. Now, is this realistic that you're going to make 1% every single day? No. Some days you're going to make more. Some days you're going to have losing days. But on average, if you are able to generate this in the market, this is what you're looking at. This should be your goal. This should be the only thing that you're focused on in the market, and everything else should be noise. I know you guys are going to see, again, going back to social media, that you're seeing all of these crazy gains, these $10,000 days, these $100,000 days. With your account size, it's just not realistic. So What most people will do is they'll see their account up about 1% in a day and they're going to think, okay, well, this is not enough for me. I need to continue trading. If you overtrade and start to take setups that don't necessarily make sense, again, it goes back to following your plan in that military example. Why are you executing when your plan is not telling you? If your plan is 1% per day, looking at the setups that you feel confident in, why are you doing anything else? And here is one of the little tricks that I have kind of helped people with. And I've heard really great feedback from this. And this is what I want you guys to do. I want you guys to open up either a Sheets or Excel spreadsheet and put in a number up here that you would like your account size to be, in which you are then going to use your account for income. Now, a lot of you guys right now with those $1,000 to $10,000 accounts, you're not looking at your account for income. You're looking at it to flip your account. Now, with that mindset, you approach the market in a much different way than if you were to use a larger account size to generate income for yourself. Let's say you have, again, that $1,000 to $5,000 or $10,000 account. You're going to try to get that account to $50,000 as fast as you can, but that's not the way to do it, because if you look at the market that way, in order to get those types of returns, you have to take on an absolutely insane amount of risk. Now, with a high degree of risk, there comes a high potential for reward, but there also comes the high potential to absolutely annihilate your account in one day. So let's say right here, that what you want to do with your account is get it up to $100,000 and use that for income. Now, I've talked about this before and we briefly touched upon it, that what we're doing in the market here is learning how to manage money. If you cannot effectively manage a $1,000 account, a $10,000 account, what makes you think that you can then jump up to $100,000 and have similar results? I'll give you the answer. You can't. If you have not built the skills with those smaller accounts in order to generate consistent profits, you are going to be in a much worse emotional state when you jump up to those larger accounts and you lose a giant portion, if not all of that account. So here's what I want you to do. When you are up 1% per day, or let's say you have a great day and you're up 2%, I want you to set up this little schedule for yourself and say, okay, if my starting balance is 100,000 and I'm up 2%, if I were using this account size, I would have made $2,000 in one day. Then I want you to ask yourself the question, is that enough for me today? If that dollar amount is enough, you close the screens, you get off the charts, and you are done. Most people, $2,000 in a day is going to be enough. If not, I mean, you've got some other things that you need to figure out. But I want you guys to think about it like this. If you were then using your account for income with the current size that you are in, you're probably going to be all right with 1% to 2% in a day. Now, here's what treating the market like this enables you to do. I know a lot of you guys go up 1, 2, 3, maybe even 5% on your accounts in a day, and then you give a significant portion of those profits back. If you treat the market and your account like this, what you're able to do is stop trading when you're green and actually put the power of compound interest on your side. You might think you are, but if you're going up 5% in a day and going down 1, going up 3, going down 2, like, it's just not going to work out for you. You have to realize that what we're doing here is learning how to manage money, not gamble. Now, the other part of what we're focusing on here is delaying our gratification in the market. Now, if we go back to that compounding interest calculator that we're going to look at here, for some of you guys, it's going to be very, very, very difficult to wait around and say, okay, I'm going to make my 1% and watch it slowly compound by putting in a high degree of mental and, let's say, maybe even physical effort, depending on what time zone you live in, waking up super early every single day to trade the markets. It's going to be hard to delay that gratification. So here is what I want some of you guys to try and do, and this is something that a lot of people don't do, no matter how big or small. I want you guys to have a schedule for yourself for withdrawing some profits into a secondary bank account. Now, here's what this enables you to do. It keeps you accountable to yourself and your goals every single week, every 2 weeks, every single month. It gives you a light at the end of the tunnel and makes what we are doing here in the market real. I like to say that sometimes when I'm trading that these are just numbers on a screen, where it helps me relax at watching these very large dollar amounts fluctuate around in my account. But once they are back into my cash balance, well, I want to make sure that I'm able to reward myself for good behavior in the market. You should also punish yourself for bad behavior in the market. Remember, going back to what we talked about at the very beginning of this video, your decisions are going to define your performance in the market, good or bad. So make sure even if it's $10, withdraw some of those profits out of the market. You don't have to let them sit there in your trading account, because when you see those dollar amounts in your account, it's not going to feel as real as if they're in your bank account. Now, again, you don't have to do a thing with that money once it's in your account. You can just let it sit there, deposit it back later. Or you could do something wild. You could go to the club. You could go buy something. You could take your significant other out to dinner. You could set it aside and invest it into a long-term portfolio. It doesn't matter what you do with the money. As long as you are able to hold yourself accountable, that is what actually matters. Now, the next part of fear and greed that we need to talk about after we've covered greed, logically, would be fear. Now, there's two types of fear in the market. There is fear of missing out and there is fear of loss. Let's talk about fear of loss first. Now, going back to what we've talked about before with having your specific trading plan and defining your risk before you enter the trade, a lot of that should take away a lot of the fear you have of loss in the market. Now, remember what we were talking about, that you are to have a system that you are trying to exploit your edge in the market over a period of time. And you know that you do have an actual edge in the market, which, again, an edge is just a higher probability of one outcome happening over another. So you are putting yourself in a positive expected value situation when you are entering the market every single time. Now, when you predefine your risk before you enter the trade, you know what the worst case scenario is. You know what it is. Whether it's 1% of your account that you're risking, 0.5%, whatever that dollar amount is, you know the worst case scenario every single time. So then why are we afraid? Most of the time we're afraid of ourselves. And this is something that a lot of people don't necessarily want to admit, or it's not something that they realize. If you predefine your risk before you enter the trade, and then you start moving your stop loss, or you start averaging down on your position, and that loss becomes greater and greater and greater, and instead of risking 0.5% or 1%, your overall portfolio is down 5%. That's what's causing a lot of fear in the market for you. You're afraid of yourself and afraid of what you might do in the market. So having those hard stops or looking at those points on the chart where it's going to tell you, yes, this is where the trade is invalidated. Again, if you have, let's say, according to your back test that you are running with your strategy, which you should be doing to make sure that you are going to have success over the long term, if you know that you should about have, let's say, a 60, 70, 80% win rate, you have no idea what the outcome is going to be on any individual trade. You don't. You have no idea, and it shouldn't really be a factor in whether or not you take the trade or not. The trade setup is there. According to your system, you have to take it. That is how this works. Remember, you have to act like an algorithm or a bot when you are participating in the market. The next part of this that we need to discuss is the fear of missing out, or FOMO. Now, this is something that I see time and time again with retail investors and new traders that is such a hard thing to overcome. Now, I live stream every single day on YouTube. I'm always in our private community, the Trade 1348 platform. And what I'll see happen a lot of the time is that according to our system that we're using, again, I have so many videos about this if you guys do want to check this out. Again, everybody does get a month free using code GAINZ, GAINS. So make sure you guys check that out if you're interested. But what I'll see a lot of the time is that the trade setup will look good. The stock will run in whatever direction that person wants. And they will say, basically, after the trade is over, or it looks like it could continue, let's say a stock is really aggressively running to the upside, they'll start calling out that that stock is running to the upside. Now, when I see things like that, I immediately get this weird feeling in my stomach. And I call it the oh shit zone in the market, but there's probably a better term out there. But what happens is that when stocks start to make an aggressive move in one direction, everybody starts to look at it. Now, what happens next is, oh shit, retest. Most of the time or a complete reversal. Most of the time what happens with prices, it's not going to move in one direction forever, but people like to think very simply about the market. They think, oh, just because this stock is continuing to run or has shown me that it's running right now means that it's going to continue. That is not the case. And this also goes back to our system. Is your system to chase every single stock that's ripping or tanking every single day? Absolutely not. You would lose all your money in a week. This always is going to come back to following the rules that you have set out for yourself every single day. You guys will hear me on a lot of these live streams too, where people will say, this stock is running, this stock is doing this. And I will honestly, frankly say, Don't give a shit. I don't care, because it is not what I need to be looking at in the market in order to make money. Just because the stock is running or tanking, I'm already late. Sometimes I've heard this saying, it's better to be late than wrong. It's better to not be late at all. Honestly, you want to make sure that you are getting your entries that fit your system with proper risk, and you know exactly where you are going to enter and exit and why. Now, in addition to this, I do want to briefly go back and touch on this fear of losing money aspect of it, because FOMO is a relatively easy thing to eliminate. Because if you just focus on your system, you're rarely going to FOMO into any of these plays here. But this fear of losing money is very interesting to me, because what most retail traders will do, and the reason why they're not having success, again, guys, you have to change your approach in order to change your results. Remember that quote at the beginning: everything is in your control. Now, what most people will do is they will label a trade in which they made money as a winning trade and a trade in which they lost money as a losing trade. Guys, any moron with an internet connection can enter the market and make money on one given trade. It's possible. Everybody here most likely has went through 2020 where you bought leaps on anything and you made a boatload of money. Anybody can do that. But that's not what trading is. What you need to realize is that a winning trade is one in which that you followed your plan to an absolute T, regardless of win or loss. A losing trade is one in which you let your emotions and lack of trader psychology and emotional intelligence get the better of you and cause you to do things that strayed away from your plan. I want you guys to think about the market like that rather than I need to make money right now, because the fact of the matter is, most of you guys with your accounts right now are not going to be able to generate any significant life-changing income with the amounts that you have in your account right now in a short time frame, unless you do something wildly risky and give yourself the ability to lose your entire account. These are principles that you guys have to understand when you approach the market every single day. You can write this down. You can write down if you made money. But again, at the end of the day, you have to make sure that you are trading your plan to an absolute T, because all of the work that you did previously, figuring out, okay, this is where I need to enter, this is what my stop loss is going to be, this is how I'm going to manage the trade while I'm in it, that is all going to go out the window if you start variating away from your plan. Now, let's go over a quick example here. Let's say that you buy calls on a stock, or you go long on a stock, you buy shares, whatever it is, and the price goes below the point on the chart in which you have told yourself before you're going to get in that you need to get out because the trade is no longer going to go in your favor. But when price actually gets to that point, you don't sell. You actually buy more. You average down. It goes down a little bit more. You average down more. Then price starts to reverse. It comes back in your favor and you sell at a profit. That is what most people would deem as a winning trade, but was it? No, it wasn't at all. You didn't follow your plan. The trade started to go against you, and you started averaging down and throwing more money into the market and subjecting yourself to more risk. That's not a winning trade. And here is where this problem comes. The problem isn't on that one trade. It's when you see something in the market happen like that again. When you look at the market and you're in a trade and it goes to the point at which have already said that you need to get out and you start averaging down again and that trade really goes against you, you are going to think to yourself, well, it still worked out the other time. I might as well keep doing this. And before you know it, you have a blown account. Now, guys, a lot of the things that we have covered in this video so far, it sounds a little bit analytical, logical. You have to do a lot of deep inward thinking, and that is the case. But when you're actually approaching the market here, I don't want you guys to overanalyze. I don't want you guys to get analysis paralysis. And going back to the plan that you have in the market is always going to save you. And I tell all these people in our community, all thousands of them, most of the time when they ask about what to do in a specific situation, I don't say anything. That's not my job. I say, what would Rita do? Rita is the name of one of our most successful algorithms, for those of you guys that don't know from the screenshot that I showed you guys earlier. What would Rita do? It's programmed with all the rules that we teach you guys every single day. What would the bot do according to the rules? The answer then becomes pretty self-evident. Guys, at the end of the day, you are going to be in control of your own trading decisions and decisions in your normal life too. You're in control. Win or lose every single time. You can control what you can control, your own decisions. If you start to make better decisions in the market, following your plan, following your rules, again, those are there for a reason and they're there to protect you. So guys, that's going to wrap it up for this one. If you did enjoy this video here, make sure you guys drop a like down below, subscribe for more videos like this. Other than that, everybody, happy printing. Peace.